Good morning, everyone, and welcome to Market Fatafat. Well, what a way to start the show. 11,000 on the screen. It's the Sensex up about 0.5%. And you've got a lot of sectors that are really playing catch up and really fueling the sort of move that we're seeing on the frontline index. Powered today by the IT sector primarily. You've also got sectors like media, which are holding out. Energy is packing in a punch. Services as well as metals firmly in the green. Pull up the advanced decline ratio as well, skewed in favor, I think, of the gaining side now, despite the broader end of the market not really following suit. And there's a whole host, still in favor of the losing side. And there are a whole host of names like Tech Mahindra, Z Entertainment, Dredging Corp, Ipca, Dish TV, Oberoi Realty from the broader end of the market that are flexing their muscles. So that's a 10% gain that we've witnessed since the month of October on the frontline index. It's the first time since October that we're touching this level, and there've been quite a few stocks that have really aided this move since the last time we hit this level. The likes of Titan have gained 31%. It's been a solid mover of late. Axis Bank as well, after all the news flow, has held out. UPL, the Aritzia acquisition as well, has seen the stock scale up. Bajaj Finance has been quite a stellar performer, rewarding investors despite the market volatility. And Kotak Bank, Asian Paints as well have been some key nifty contributors, while the likes of Sun Pharma have had it rough. Grasim has been a very big underperformer from the frontliners. JSW Steel from the metals pack has had it tough. No surprises to see a name like Indiabulls Housing on that list as a big drag, losing nearly 26%, while Vedanta as well has had its fair share of trouble. But let's move on and bring on board our guests and start off Market Fatafat. We have Kunal Bothra, Gaurav Ratnaparki, Siddharth Bhamre and Mubina Kapasi now joining in. And let's kickstart the show then with the newsmaker of the day, so to speak, Tech Mahindra being one of them. And let's just, Mubina, have you walk us through the internals and how the stock has reacted.
Well, not a bad set of numbers, there was a steady performance. Revenue was a beat. Margins as well did manage to come more or less in line with expectations. And of course, even the outlook that the company did give was very positive. The brokerage community too seems to be very pleased with what Tech Mahindra has done in the third quarter. For example, we have Credit Suisse, which has maintained an outperform stance. And in fact, I think that's mostly been the stance for a lot of brokerages as well post their numbers. So they have a target of 950 rupees as they believe that the telecom story is starting to pan out, and it's been a positive surprise in the third quarter all around for Tech Mahindra.
Oh yes, indeed. No wonder then that you're seeing investors giving this one a big thumbs up. That's a 6% move on the stock. Well, let's move on then and focus in on a private banking name, and that is ICICI Bank. Let's understand, Kunal, at the current level, as it's nudging the 360 mark, what's the position?
So, ICICI Bank has corrected from 385 levels to 340 in the last 1 month. It's underperformed, its immediate peer, that is Axis Bank, in terms of price performance for the month of January. But when you look at the short-term charts and the longer-term charts for ICICI Bank, there is a strong case that this 340 support is a very strong support for ICICI Bank, and you could see the stock, catching up with this strong bit of underperformance. So I believe in that context, ICICI Bank could be a very good buy. 360 is where the stock is trading approximately. I would suggest a buy with a target of around 385 and stop loss at 350.
All right, there you have it. That's the take coming in. Target price 385. Moving on then, let's focus in on IDBI Bank as well, and quite a divergent move, you'd have to say. As it's currently struggling around the 44 mark. Gaurav, what is your technical call?
Yeah, IDBI Bank is clearly in a downtrend on multiple time frames. The selling pressure got aggravated as the stock breached the support zone of 48.47 on the way down. So even in terms of wave structure, the fall that started from January high is in wave 3 on the downside, which means there is much more pain left on the downside. The stock can come down to the level of 39.50. So better to avoid catching the falling knife over here.
To avoid catching the falling knife, that's the take coming in from Gaurav when it comes to IDBI Bank, down 5%. Meantime, yesterday you saw HPCL come out with its numbers. What exactly is the brokerage take? Well, CLSA is very optimistic. They believe that the company has beaten estimates due to a stronger refining. They've raised the FY19 to 21 EPS by 18 to 96%. Although they continue to retain their sell rating, they've upped the target price, so now it's at 210 rupees per share. fairly bullish all round. 230 is where the stock is currently at. Well, let's move on then. And Kunal, we were talking about the movers from, October's 11K to what we're seeing today. And UPL has been quite an outperformer, despite the fact that it's been in a bit of a sideways move. What is the take now on UPL? Do you believe that it has the legs to scale up?
Absolutely, Avan. After a boring or a sideways 2 months, I think 2 or 3 months, I think from November, where the stock was stuck in a range of 730 on the downside and around the 790, 792 mark on the upside. So it spent its last 3 months in this 10% range. It's finally managed to break out this week, and I believe that this breakout is on the back of some increasingly high volumes. That should itself result into the stock restarting a new uptrend for itself. And generally, these kind of pattern breakouts leads into the stock even retesting its previous swing highs or lifetime highs, as the case may be. So UPL is a strong buy in that sense. Targets I have kept closer to 850 mark on short-term charts and stop loss at 775.
Okay, waking up from its slumber, and Kunal sees quite a bit of action on the stock. It's a buy at the current levels, target 850. Mubina, let's move on and talk about the royalty twist for Jubilant Food. What's the latest?
Yes, yesterday the company did decide, rather the group did decide that Jubilant for the brand will be charging about 0.25% of revenues, and subsequently they did decide not to do so, in fact effectively reversing their decision just within 5 hours. But this is something that has perhaps caused a lot of the brokerage community to heave a sigh of relief. Nevertheless, again, all those concerns with respect to corporate governance and promoter debt, etc., has been raked up, because the Bhartiya group or the Jubilant group does have debt on their books. So all of this is something that is raising concerns. Not to mention CLSA for one has said that the fact that they had the intent to charge such a royalty itself is being questioned at this point, and hence you are seeing that continued decline in Jubilant Foodworks despite the reversal in the decision to charge royalty. Okay, yes, the stock is continuing to bleed in trade today, 4% at 1248. Well, speaking of stocks bleeding, there's Voltas as well. It's a 1% downtick that you're seeing at 528. Where are you placing your targets and stop losses, Gaurav? What's the technical position?
Voltas has basically formed a head and shoulders pattern on the Delhi chart, which is a bearish pattern, and the pattern has broken out on the downside today. When the daily momentum indicator is on the verge of a fresh sell signal, whereas the weekly momentum indicator is already in bearish mode. So this is an attractive setup to initiate a fresh short position. When the risk-reward ratio is quite attractive, so one can sell Voltas at current level with stop loss placed at 540 and target on the downside will be 480.
Alright, keep an eye out. Those are the levels on Voltas. On that note, tell you what, we slip into a short... Thanks for staying on with us. This is Market Fatafat. We're outlining all of the stocks to watch out for. 11,000 being maintained on the index, with the Sensex up to 22 points. Well, let's move right on and talk about then the next stock, and that is under pressure. That is Bharat Forge. And in fact, you have the NA Class 8 stock sales that's down nearly 68% on year. And that is at about 15.8 thousand units, down nearly 68%, as I said, for the month of January as well. The trend continued to be lower, 42% lower, and in November they clocked in about 27.5 thousand units, down 14%. Well, Morgan Stanley has come out with a report saying that the weakness is likely to drive concerns for a full-year outlook as well. They are seeing signs of a truck cycle peaking in FY20, and that's only increasing, and concerns over the cancellations may be materializing. The stock down nearly 2% in trade today. At number 9, then, let's talk about one of the big underperformers in the market, and that has been Grasim. But is it, Kunal, sort of a similar tale as UPL? Is the trend reversing? What is your observation?
No, so I think it's a different chart compared to UPL. UPL on one hand is trading at the upper end of resistances, above its moving averages. Grasim is way below its moving averages. So case in point, the 200-day moving average for Grasim is at 940 levels, and the stock is at 720. So there is this huge gap of almost 220 rupees from those averages. But nevertheless, I think the stock is trying to show some strength today. It's also a 5-day reversal, a downside reversal for the stock. And I think even if the short-term reversal plays out for the stock and it holds on to those supports of 700, you could see the stock retracing back to 750 plus. So Grasim should be onto traders' radar, especially for anyone who's looking for a short-term reversal. 750 plus could be a short-term target.
All right, there you have it. That's the take coming in on Grasim with respect to Kunal's observations. Well, let's move on to a mid-cap name, and that is Tata Chemicals. Well, it's been an absolute washout of a quarter, Mubina.
Well, that it has, on the top line front, it has shown decent growth on a consolidated basis, 10%. But I think the real trouble comes in when you look at the bottom line at the margins. The margin figure has come in compressed from 21.9% to 16.6%. So quite a compression over there. And on the bottom line front, it has fallen significantly. So from more than 800 crore rupees, it has come in now at 266 crore rupees. So that's, of course, Tata Chemicals for you. Of course, there was that exceptional loss of 28 crores for provision for increase in a UK pension liability versus 60 crores for actual gain in post-retrial medical plan for the previous year. So that as well has weighed in on the profitability. But not to mention, there has been a surge in other income, and still Tata Chemicals has not done well on the bottom line. Again, margin pressures weighing in over here as well.
Yeah, and that's really reflecting in the stock price. Investors giving this one a big thumbs down. Moving on then, let's focus in on Vodafone Idea. Yesterday we saw a lot of concerns with respect to Moody downgrading their overall debt rating. The stock is now languishing at a level of about 29. Gaurav, do you believe that there is more room for downside?
Yes, definitely. Basically, the stock is forming lower top, lower bottom on the daily chart, which is a bearish sign as per the Dow theory. Even in terms of wave structure, the fall is not yet complete on the downside. So unless the lower top, lower bottom formation gets violated, there can be some more room on the downside. And on the downside, 26-25 will be the crucial target area to watch out for. And reversal for this bearish view can be pegged above the swing high, which is at around 30.70.
All right, that's the take coming in. More downside on the cards. On that note, gentlemen, as well as Mubina, thanks so much for joining in and flagging off all those stocks on Market Fatafat. Well, let's flag off another one then, and that is Jet Airways. With those payment defaults beginning at the company, the stakeholders in the restructuring process are now in a huddle. But the current scenario may not be good news for the airline's promoter Naresh Goyal, as sources say that with the current valuation with which the deal is being worked out, Goyal's stake in the airline might go to even below the talks of 20%. My colleague Utkarsh Chaturvedi has more details. Utkarsh, tell us how are talks placed right now, and is the new restructuring scheme final?
Well, as things stand right now, what we are picking up is that Naresh Goyal's stake might fall below 15%. Now, our sources tell us is that around 200 to 250 crores is what Naresh Goyal is ready to put in the new restructuring system. But the valuations which Etihad wants and the banks are also favorable of. With this, the current stake of Naresh Goyal with that amount of money put in will be around 12 to 15%. But Naresh Goyal is not happy about it. What Naresh Goyal is looking at is a stake somewhere between 15 to 25%. 20% is ideal for him. This is what he is looking at in the new restructuring process. But obviously, it is the conversion rate and it is the valuation at which the deal happens is very important, because remember that Etihad is looking to put in around 40%. They are looking to increase their stake at 40%. They are at 26% currently. So a 14% increase in stake is what they are looking at. Also, the bankers are also very important in this whole race, because the conversion rate at which they will agree to really convert their debt into equity. What we are being told by a host of sources is that marathon meetings are on between Jet Airways, Etihad, and the bankers are also kept in the loop as well. Now, what we are picking up is that next week is the board meeting of Jet Airways. By then, they want to have a plan in place so they can get approvals from the board, and then there's the EGM which is slated to happen later this month. But as we speak, nothing has been finalized. All the possibilities are on the table, and the way it looks like, this match can go till the last over.
Thanks very much, Utkarsh, for giving us those details. So we'll have to see what exactly pans out with Jet Airways, as we understand that Naresh Goyal's stake is now under the axe. 238 on last take. But will 11,000 on the index. Let's take, we'll wrap it up then right here on the show Markets at noon, coming up after a short break.